It's Thursday, January the 6th. Welcome, everyone, to the new year. John and I, of course, we did a video before the holidays. Hopefully you got to see that, but we're back in the office and back in the saddle again. So with anticipations for 2022 being a good year.
Good year. Again, Happy New Year. I'm glad to be back. It feels good to be back. But you're right. We went out last year in videos saying that one thing you should watch is the Fed and what the Fed does. You don't fight the Fed. And certainly yesterday in the marketplace, that rang true. The meetings, minutes of the most recent meetings came out. And there was a tone in it that moved from dovish to hawkish and an indication of potential increasing in interest rates starting in March versus the summer.
And 4 movements versus 3, which was anticipated towards the end of 2021.
And tightening, quicker tightening of the quantitative easing. So you had the market, I won't say the market was surprised because the market knew something was coming, but it was caught off guard.
Well, we also had a lot of run up over the last 4 or 5 days of trading in the end of the year and into the new year. So it was a give back of some of that.
So you had a downturn in especially the NASDAQ, and NASDAQ is led primarily by the FANG stocks. And on our show today, I thought Gib did a great descriptive position of our thoughts of the FANG stocks, those foundational stocks that are in tech, that regardless of where you are, unless something in your risk profile has dramatically changed or your need profile has changed, that really those are foundation stocks, and technology is part of your portfolio and should be, and you just work through this.
That's right. And in most of our portfolios, we have 3 to 5 of those that, as you said, are foundational. Maybe on occasion we'll sell gains in a couple of those, but for the most part, we buy those, we hold those, and they provide you a lot of stability, even when you have tech trades going south, as they did a little bit yesterday. A little known fact is that last year, this doesn't happen very often, but last year was one of the few years where all 11 of the sectors in the S&P 500 had positive returns. You usually don't see that. There's usually 2 or 3 underperformers, but that wasn't the case in 2021.
This year so far off, areas that we have already begun to move towards and are looking at, the consumer staples, the energy, the real estate, those are areas we've added to already and we're adding to. If you look at, and we have looked at and researched multiple different areas that are giving us reporting of things like Goldman Sachs and Vanguard and First Trust and Federated, all are saying that the market this year in their expectation is to be up, but it's not going to be up as much, somewhere in the 8 to the 9, 10% range. Inflation, they believe, will stabilize during the year, and they believe worldwide the major countries will be increasing interest rates. So we are shifting our portfolios to accommodate that and looking at it. We've had, I know you've seen it, our portfolios, your portfolios had a good year last year.
They did.
And so we're making adjustments going into this year. Volatility will be here, but we feel we have a full grasp on how to navigate it, and we're always here to have a conversation with you.
And you just never know. Something could come out of the blue, so we'll be ready for that also. So I think we are situated well for 2022. We're going to do some tweaks, as John said, and we'll let you know about that once we do it. But always remember, it is your money,
and your money matters.
Talk to you next week.